Welcome back to the Worry-Free Retirement, and our topic has been this idea that your 401k has a tax tumor, or what I like to call a debt. That's the money you still owe the government that has not yet been taxed. But what if you have a true debt? In other words, you've borrowed against your 401k. You've maybe met with us at Tony Walker Financial. You like our products, you like our process, you love the game plan, and you're like, okay, I want to roll over that 401k to you guys. What's going to happen with this debt? Well, let's say people aren't familiar with what happens. So in this case, if you were to roll that over, most people take the option of simply having the custodian waive the debt. In a sense, it's not really free here, but the debt is basically taken care of. And what happens is then that's going to be attributable as taxable income. Let me explain. So let's say you have a $500,000 401k you're going to roll over to us. And in the meantime, you have a $50,000 debt associated with that 401k plan. And you hear the fact that, oh, you mean I don't have to come up with out of pocket? I can just pay taxes on it? That's great. But you got to slow down a minute and think about this. If you're going into retirement, that will be applied to other income. Put this graphic up, Aaron, which could affect your tax bracket. And you're going to see this in a minute. In other words, the more you make, the more the government's going to take. And this extra debt that you decided to pay off will be attributable as taxable income, which could throw you in a much higher bracket. So you have to be careful and just understand what the next steps would be. And that's why you need to work with somebody like us. So let's imagine this. You have $50,000 in debt. Maybe your spouse is still working and you're drawing Social Security. We'll just use rough numbers. Let's say that's another $25,000 a year. A portion of that's going to be taxable. Let's say you're going to start drawing a pension, $20,000 a year. That's going to be taxable. Maybe your spouse is still working. Your spouse is making, let's say, $60,000 a year. You see where we're going with this. I mean, this is going to add a lot to this. And then in the meantime, you, on the income plan, you wanted to take $2,000 a month. When we move the 401k over to an IRA, you want us to send you $2,000 a month, which is no problem. But again, that $24,000 a year is added to your taxable income. So if you were to add all this up, you are definitely going to be in a 22% bracket. Plus, you're going to have some state on there. Depending on the state, we'll say just average 3%. It's different for Indiana and Kentucky, but we'll average it at 3%. So look at that. All of a sudden, you've got 25% in taxes you're going to have to essentially come up with. You're not going to see that immediately. You're going to get a 1099 and turn that into whoever does your taxes. And then all of a sudden, they're probably going to call you and say, hey, by the way, you didn't withhold enough in taxes. You need to come up with about $12,500 in taxes. And you're like, well, why is that? Because this was attributable as income. There wasn't any taxes withheld when you rolled over your 401k, but that 1099 sparked the additional $50 having to go on your tax return. So you might be saying, well, what's the point, Tony? The point is, hopefully you are working with a retirement planning firm that specializes in tax planning. While we don't do your tax returns, I think we have a very valuable service here. It's absolutely free for our clients. And this is the kind of thing we're going to weigh in on. Make sure you don't make some grave mistakes with your money and blindly pay taxes that shouldn't be owed. So in this example, we would have gone through a detailed analysis of what we could try to do to mitigate some of those taxes and maybe things we could have done within this plan to lower that taxable income. So that's you right now, whether you're retired or retiring soon and you're worried about taxation of your 401k and realize the government's got a lien on this thing and you want to kind of reduce that lien over time. Let us see if we can help. We're full-time retirement planning specialists and we help savers worry less about money by trying our best to mitigate what I call the tax tumor. So to take advantage of talking to me by phone, we call it the free fiduciary phone call. All you got to do to talk to me is just log on to TonyWalkerFinancial.com. You're going to click on that Let's Get Started button. We will call you to arrange this phone call. Now, if the internet's not your thing, you can call us 24/7 at 877-499-9255 and just let them know that you want to set up a free phone call with Tony.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips and be sure to hit that like button and that subscribe button for more videos.